Hey there, good afternoon traders. This is Trader Tim from over at eminimind.com doing a Monday market analysis video. Let's kick things off looking at the S&P daily chart. Pretty big rally today off of a break of lows, and that's important when we break below the prior day's low because that's the opportunity where sellers can, come in, and they could be sellers in the form of having stops being taken out, or they could be sellers in the form of putting on a brand new position. But both on Friday and today, we dipped below the prior day's low and then we rallied. The Fed came out and said they're going to be buying up some securities, continuing to buy up more securities. And so, that kind of stuff certainly helps to push the market up. And if we look at from the swing low to the swing high, we can also see that we're at the 50% retracement, right at that 3,000 level. So I don't really put a ton of I don't spend a lot of time, trying to dissect the fundamental reasons. So regardless of, what the Fed's doing or what bigger picture news and things is coming out, I really focus on just the technical aspect and trading the chart. A lot of times news comes out, it seems like the market should do one thing and it doesn't. And if you get hung up on that and really try sticking with trades because you feel like there's something that should be happening and it isn't, and you're going to stick to your guns and just hang on, you'll really get burned. So if there's a place for fundamentals, absolutely, but when it comes to day trading the E-minis, it's almost to the point where it's irrelevant. You can get down to such a granular level on the chart that you really don't even need to pay attention to the fundamentals, at least for the way that I'm trading. So tomorrow we've got a couple things. I think housing market index, business inventories at the 30 minutes after the bell, and then I believe Jerome Powell's speaking on Tuesday and Wednesday. We'll also be doing a live trading session tomorrow morning, Tuesday, and you can tune in over at eminimind.com/VIP. So we're sitting at the 50% here, the 3,000 mark. I also want to pay attention to where is the short 50%. If we come back to the 29th, we have a little bit of a swing low here. One day where we dipped below the prior candle. I guess you can argue over here as well. We dipped below the prior day's low, and then we closed higher. Same thing over here, and then this guy back here on the 27th. So this one stands out just because we dipped a little bit further, but all three of these are just one-day swing lows. So they're not super strong, but it does constitute as a swing low. This does constitute as a swing low break, both of these. And so we want to watch as we come up to 3,100 and see what kind of participation there is from the short side. Now, if we go to the NASDAQ, we can see not only have we broken this is that same retracement long, we broke that 61.8, and we were trading at the halfway back short. And so the NASDAQ's kind of leading, it was leading us higher. Notice how the NASDAQ is so much higher above all-time highs compared to the S&P, Dow, and Russell that has not broken its all-time highs yet. So we'll see if the NASDAQ leading us higher ends up leading us lower. So I'll be watching that one first and foremost tomorrow, and then the other three, S&P, Dow, and Russell, to see if they tag at their 50% and then get some selling. Volatility-wise, probably going to stick around for a little while. I mean, this is a great environment. Mid-20s to mid-30s is a great day trading environment. If we spike up and kind of break above 45 and back into the 50 mark, you want to look at maybe shrinking your position size. So if you're trading 4 contracts, go down to 2. If you're if you're only trading one regular ES, you may want to look at moving over to the micros and trading, 4 or a smaller, trading a larger number of contracts on the smaller micro contracts so that you can still scale out and do all the things that helps, make for profitable trading. So keep an eye on the VIX. Now let's go over to today's chart. First thing I want to mention is we opened, here's this dotted line is Friday's on the left and then today's on the right. So we opened the gap down, we broke below Friday's low, and then we rallied. We've pretty much rallied the rest of the day. So I'll clean up some of this stuff here. We had a couple of pullbacks on the 5-minute chart. We didn't quite tag the 50%. So the first one here, about 15 minutes after the bell, came down to a 67.25, and the 50% was 65.75. So a little over a point away, point and a half. And so when you come over to the 5-minute chart, or to the 512 tick chart, back it up. Get to today. You can see that 5-minute drawing. This is that same drawing. This retracement long here is this guy right here. And so when you come down and you don't quite touch the 50% retracement, you want to look for signs of the market changing direction and moving higher. Well, one of the first things you can do is look for a double bottom or some sort of support. And then the second thing is a break of a swing high. And so when you wait for the 5-minute level to trade, or while you're waiting for that 5-minute 50% level to trade, you can come over here on the 512, draw up a little retracement and say, okay, well, if the market is bullish and isn't going to make that full pullback, here's an opportunity, 29.70 for an entry. And then just keeping that same 2-point stop in this volatility environment, and then using that as your entry, versus if you're waiting for that 5-minute to trade and it doesn't get there, you can still be a participant and still try and target the negative 23 on the 5-minute chart. You're just using the 512 for entry. So my entry today, actually, what I ended up doing is drawing up the opposing. So this was right at the 15-minute mark. I drew up the opposing, and I saw that we broke its 61.8. So I draw up the next retracement, little bit larger retracement. And being Monday morning, I like to kind of, maybe slow play into the day and not get super aggressive right at the open. So I was waiting for a little more confirmation today. On the 5-minute, we kind of made a bull flag here with the pull and then a couple of consolidation bars. So I actually chose to get in over here. Same sort of scenario. You've got a larger support identified, a little bit of a bounce, almost a double bottom. It was one tick off, but close enough. And then drew up the retracement. And then from there, once the market is moving, you can just draw up the next retracement. And this first one didn't even come close to making a pullback. We kept going higher. So if you just use that swing low to highs and trailing your stop the whole way below the 61.8, and then we tag its negative 23, and you can go from that swing low to highs, and then that's eventually where you get taken out, about 29.82s. So that was a pretty nice run up. The thing to remember when you're, especially when you're day trading, but when you're trading in general, is you don't want to get caught up in looking at, like, if the market keeps going higher. So let's say you get taken out of 82s. Don't spend your time kind of getting caught up in, well, I missed, the market went another 10 points and I didn't capitalize on that. Just place your trades, draw up your uh, next retracements, or trail your stop in the same fashion each trade, and then when you get out, just start looking for the next setup. It's not very productive to because you're never going to catch the exact top and the exact bottom. So if I told you that you can make 10 points a day just trading the ES, most everybody who's trading is going to say, great, I'll take that. So if you try and get caught up or get greedy and kick yourself for missing out on another 5 or 10 points, you're just going to end up missing trades. Instead, focus on, okay, well, I started the day with 0 and I just made 11 points, so that's a pretty good trade. And so if you focus on just executing at the 50% and then trailing your stop the same way so that you don't have to worry about, okay, this trade I'm going to trail, then the next trade I'm going to use a fixed target, and then, well, that didn't work, that trade, so now I'm going to go back to trailing. And if you're bouncing around all the time, that can really be tough psychologically, because you feel like you're always on the backside. You're doing the opposite. So if you keep your trail stop consistent, that will help build intuition and build a little bit of patience, and it almost has a calming effect so that you don't get stressed out or upset about seeing your trade that you were in take you out and then keep going. So try and when you're logging your trades, you want to look at a whole bunch of trades at once as opposed to one or two and making decisions based off of how those trades responded, because those that one big winner or that one trade where you notice something occur, it might just be an outlier. So if you throw that trade into the mix and you look at 20 or 30 trades at once as a group, now you'll be able to get a better perspective and picture of, okay, yeah, this is really what the numbers are looking like. And if you can get up to 100 or 200 trades in your trade log, that will really help build some confidence in, okay, yeah, I don't need to catch a 20-point move. All I really need to do is get in, trail my stop, and if I can catch 5 or 6 points on a trade, that's a great trade. And in executing your exit strategy, if you will, occasionally you're going to catch that bigger runner, that home run. But if you swing too hard and you're always trying to murder that ball and just knock it out of the park, then not only are you going to miss the home runs, but you also miss the singles and doubles. So if you focus on those 5 or 6 pointers, just taking a nice smooth stroke, then occasionally, with a little bit of luck, you're going to catch that bigger runner. The next trade I wanted to highlight was actually one that I didn't take, because we came up to this 50%, which was the daily. It's not super clear here. Let me go to the daily chart. So I was talking about that daily ES long, 50% long. I get my chart back up here. So essentially it's this daily halfway back long that we came up to on the 512 tick chart. And so when we broke the swing low, I chose not to take the short, because it would be taking a short at a long setup. And so I felt like the daily long had more weight and the momentum for the day was certainly up. So chose to pass on that one. It got a little bit of a slide here, but then we resumed trend, and depending on how you drew it up, you may have been stopped out if you drew up kind of like this, a bigger short, and kept that 2 point stop. So I hope everyone has a great week of trading. Looking forward to continued good days here. Last week was pretty solid. Looking forward to more of that. And if you have questions, feel free to leave them in the comments below. Thanks and have a great week.